Coming up on Business Incorporated, Ghana and Rwanda sign agreement to deepen bilateral trade relations. The East African Community rolls out plans for a $900 million fruit and vegetable export. Plus, we'll discuss the pace of digitalization in Africa. Hello, welcome to the program. I'm Ladi Williams. We start off with market numbers from major equities on the African continent, where sentiment was mixed at intraday. Nigeria's NGX index rose slightly by 0.13%, while South Africa's benchmark index dipped by 0.44%. Meanwhile, Egypt's EGX 30 still closed for a national holiday. However, its index closed negative on Wednesday, down by 0.37%. The Nairobi Stock Exchange closed Thursday's trading session in the red. Over to the Middle East, where equities closed mostly positive on Thursday. The Abu Dhabi index was up 0.45%, while Dubai's index edged up by about 0.82%. Elsewhere in the region, Saudi Arabia's main index dropped marginally by 0.03%. And on the flip side, the Qatari index rose by 0.22%. And we head on to Europe now, where the big questions is Europe's largest economy will turn the corner on the pandemic this year. A new government report being presented in the German parliament today is optimistic, but with rising material prices, soaring energy costs and supply shortages all still biting, much remains unclear. Let's talk to Stephen Bersey right there in Berlin. Great to have you, Stephen. Where is Germany on the path to pandemic recovery?
So 3.6%, that's the expected growth for 2022, according to this new report. That would put it back on the pre-pandemic trajectory. You know, 2021 last year was difficult for the German economy. At times, it felt like every 2 steps that it took forward, there was 1 step back. It began the year in late winter with a recession, and then at the end of the year, it saw a double whammy from the coronavirus, the waves of the Delta variant coming in late fall, and then in the winter, right on top of that, the Omicron variant really sort of biting in. And that was around Christmas time as well, so it was a very sensitive season for the service sector. We've also seen supply issues coming really in the middle of the year and staying around for the most part. And for an economy like Germany's, that's a big deal. When you're missing, for example, computer chips for your auto industry, a country that really depends in a large part on that industry is going to feel the heat of that. There is reason to be optimistic. Business outlook is starting to pick up. We're seeing that expectations of exports from businesses, that's also picking up. We're also seeing that the hot economy in the U.S. is helpful for German businesses, with consumers there wanting to buy, the U.S. representing a very important market for German businesses.
All right, but we still see headwinds from 2021. But what's the biggest challenge ahead?
Supply issues are without a doubt going to be the biggest issue, at least the one that everyone is going to watch. Those have abated in recent weeks, but there is some sort of concern as we watch prices remaining high, and especially as we watch the further development of the Omicron variants. Now, what we're seeing in the U.S. is where the Omicron variant seems to be sort of abating more and more. There is still this very hot economy that's actually taking up a lot of the shipping, and so that's one supply issue. But then you look over at China, where the Omicron variant is really starting to come into play there. That zero COVID policy they have, that means that there's more of a potential to shut down manufacturing sites, which would then have a ripple effect for the German economy. Some other issues here, gas prices. That's what we look at when we talk about when we look at energy prices. Europe heavily dependent on gas, and it's heavily dependent on gas from Russia. So if anything comes of these tensions between the Ukraine and Russia, then that could have a really big ripple effect on the EU and especially on Germany.
Quite interesting. But what are you seeing from European markets at the moment?
Sure, European markets improving on Thursday. The DAX, for example, starting out weak, but then ending up in positive territory. Exchanges in London and Paris joined it with similar positive finishes. we'll see what happens today. European futures suggesting that there could also be a positive, at least positive sentiment early in the day. We'll see if they can escape the pessimism over in New York, where Wall Street yesterday finished for the third straight day in a row in negative territory. Still investors trying to sort of suss out what's going to happen with those rate hikes. But if Asian markets today are any sign, all of the major ones ending in positive territory, that could put some wind in the sails for European markets.
All right, Stephen Birdsey, right there in Berlin. Thank you so much, Stephen. All right, moving on now. Asia-Pacific markets were mixed on Friday following a volatile session on Wall Street overnight where investors reacted to comments from the Federal Reserve and U.S. GDP data. The Nikkei 225 in Japan gained around 2.09% to close at 26,717 points after falling nearly 3% on Thursday, while the Topix was up 1.8% at 1,876 points. South Korea's Kospi reversed losses to rise 1.87% and closed at 2,663 points. Australia's ASX 200 advanced 2.19% to end the session at 6,988 points. Mainland Chinese markets fell. Shanghai Composite slid 0.97% to close at 3,361, while the Shenzhen component declined 0.53% to 13,328 points. Hong Kong's Hang Seng Index declined 1.05% in late afternoon trading. You see MSCI's broadest index of Asia-Pacific shares outside Japan edged 0.19% higher. And stock futures declined early Friday, boosted by a jump in Apple shares as Wall Street looks to wrap up a roller coaster week on a high note. Futures on the Dow Jones Industrial Average lost 74 points, about 0.31%. They've been higher early in the session. S&P 500 futures is trading lower, down 0.17%, and you see the Nasdaq 100 futures climbing 0.30%. We have Maria Bird now, a correspondent, to give us yesterday's trading session.
Market took a sharp U-turn on Thursday as it started off the morning very strong, but ended the day in the negative. The volatility led to the S&P 500 ending at 0.54% down, the Dow Jones being down by 0.02%, and the heavy tech stocks of the Nasdaq ended 1.4% down. The Federal Reserve ended their session on Wednesday and assured investors that the inflation and the interest rates will stay steady for at least another 6 weeks.
That was Maria Bird there giving us yesterday's trading session. Well, during the early days of the COVID-19 pandemic, countries were forced to introduce several measures to prevent the spread of the virus and protect the lives of their citizens, and everyone is forced to stay indoors for their own good. Africa's content creation economy is growing and currently estimated to be worth over $100 billion. The global creator economy has led to the birth of new jobs in the past decades. Africans, especially Nigerians, haven't been left out of the fanfare, as we now have many content creators on social media who are earning a living off their talents from TikTok, Instagram, and YouTube. To weigh on this, we have Kayode Adebayo, CEO, Crowd, joining us on the program. Great to have you.
Hi, Ladi.
Hi.
Thanks for having me.
Yeah, great to have you on a Friday afternoon. Well, quite an interesting industry, content creation. You see people laughing away on their phones, watching funny short clips. How did the industry perform in 2021? What are the numbers here?
Well, just like you mentioned, it's an industry that is worth $100 billion. I think more precisely looking at $107 billion. And the good thing about it is that it's an industry that meshes together, not just, it's not a standalone industry. It's an industry that also merges together with the device industry. When you look at smartphones, the value of that particular industry as we speak now is more than $700 billion. And, it's sizable. We know that in Nigeria, in Africa, second quarter of 2021, we had, I think, 22 million phones shipped to Africa. So it's a sizable industry. A lot of things are happening. And given the fact that Africa has the youngest economy right now, so people are embracing this a lot and, making a living out of it presently.
Quite interesting. But how can this industry be harnessed to, bring in more revenue?
Well, I think we're already on that path. I think with with the incoming of faster internet technology, cheaper internet technology, cheaper smartphones coming in, and devices, of different kinds. I think already we have a youth population that has already embraced this. And of course, one of the things that we feel that should happen also is that Africa needs to start to have its own technology, basically, that enables this for the young people. So that's why a company like our company, Crowd, is already doing that. And I feel that the more the platforms, the technology, we know the culture better. And the reality of it is that if we now have a technology that's able to enable the culture and enable our young people, I think Africa stands to, be able to make a good capacity and revenue and commercial activities around this, especially for the young people, basically employing themselves to be able to enjoy.
Yeah, and I see Nigeria is playing a leading role, in the creator and digital economy, on the continent. Tell us about the socioeconomic impact.
Well, the good thing about it is that you can see that our content creators, especially in the music space, in the fashion space, in Nollywood, have brought a lot of attention to Nigeria as a location. You have, a lot of people that are trying to find their heritage, trying to connect where their DNA comes from. And all these things have sparked off because of our creative economy, basically. Look at Wizkid, for example. He shut down the O2 Arena back-to-back for many years now. Davido, you have Burna Boy. Nollywood is doing fantastic. The socio-economical aspect of it is that more people are getting to know about the country, Nigeria. More people are willing to travel. It will have a lot of effect on the tourism industry. And also, you see that technologies are coming that are helping to be able to enable payments, easy, commercial activities, e-commerce, and all that. And of course, platforms like the Crowd that I just mentioned right now are developing. So more money coming in here, more attention here. People are getting to know that we are a huge economy, we are a young market, and with all that, I think aside from the commercial capacity that we can enjoy, the social, Nigeria has a better brand right there out there now. When you go out and you mention Nigeria, it's interesting to see how people's reaction are, and I think all that has been fed by all these activities that have happened, that are happening right now on the internet.
Quite interesting. But, it seems, most of these content creators have, a short time holding, people's attention. A couple of them that were big in, 2020 are not so popular right now. Is it competition?
Well, I think it's competition. And I also think that the technology available for them now doesn't encourage a model that allows them to be able to kind of rest, recuperate, bring fresh new content, and then continue. The technology that you have out there now, it's easy for them to be, to burn out, basically, because they have to keep entertaining and keep engaging. Well, a technology that allows them to be able to serve their super fans and know that the particular period they feed them with content, they can rest, come back again, and still continue to engage their super fans and generate very good revenue from it. I think it's what we encourage this, basically. And of course, it helps people to be able to up their standards and up their quality also, which I think is very fantastic for the market. So a technology like Crowd, mentioning it again, helps to serve that super fan base, helps you to be able to give content at a particular time, rest, and then most likely come back to it again without any adverse effect to the financial returns that you're able to make on the platform. So it will keep improving. And I think eventually it will become a creator's war because there will be so many content creators, there will be technology platforms to serve them, and different people will be bringing different offerings to the table to be able to help this economy to be able to grow larger and, test different content level from education, information to entertainment. So it will become a broader market. And I think Africa, Nigeria especially, has a very strong place to play in that particular space.
Quite interesting. Well, dishing out content daily is not easy at all. All right, Kayode Adeboye, thank you so much for coming on the program. CEO Crowd, great to have you on a Friday afternoon right here.
Thank you, Ladi. I really appreciate you. Bye.
All right, so after the break, we'll look at more stories on the African continent. That's at the moment. Do stay with us. Welcome back. You're still watching Business Incorporated live on Channels Television. Now to our next conversation. We often celebrate the success of Africa's digital revolution, with everyone today using mobile phones and online services, but the pace of digitalization has been uneven across West Africa. To discuss what's been driving this, we have Ted George, Chief Narrative Officer, Clio's Advisory Service. Great to have you on the program.
Thanks.
So when it comes to, mobile phones, mobile broadband, these are now, ubiquitous across Africa. So has the problem of connectivity been solved?
Well, I think the answer is yes and no. It depends where you are. Because if you look at the numbers, for most countries, it's over 100% of the population is covered by the network. And that's because people have multiple SIMs. So the thing is, if you reconcile the data, it's the haves and have-nots. If you're in the city, generally 100% of people are connected. And in fact, people are getting more and more access to services. Mobiles and smartphones are becoming cheaper. But if you're in remote areas, rural areas, very often you just don't have a signal at all. You're not part of the network. So that's where the focus needs to be, the last mile. And let me tell you, in Africa, there are thousands of last miles out there.
Thousands of last miles. Well, mobile money, is taking off more slowly in West Africa than, say, Kenya, where M-Pesa is a dominant. What has held West Africa back here?
Well, I think M-Pesa's success is due to numerous reasons. And one of the main ones is that Safaricom is the dominant telco there and had about, 90% market share, very strong support from the regulator and the government. Nigeria is different. There are multiple mobile operators in Nigeria, so it's much difficult to have the connection between them. If you want to transfer money from one mobile to another, there's cost, there's difficulty there. And also, banking was actually quite developed. A lot of people in Nigeria, the first time they experienced digital banking was an app from their bank. It wasn't a mobile money. But that said, Nigeria is catching up really fast, and the whole of West Africa. We've seen an explosion in e-commerce. I'm sure you've seen it on your streets, whether it's Ubers or delivering food or whatever, that's really grown. Everyone's starting to use mobiles a lot more. So I think we're going to see that grow quite a lot. We're going to see a lot more in terms of mobile banking. It's just Nigeria's catching up on Kenya.
Yeah, even with that gig economy there. But I think usage of internet is still, relatively low in West Africa, even though there are millions of mobile broadband subscriptions. What's the issue here?
Well, I think one of the biggest issues is actually to do with the 3G signal. As I mentioned, if you're in a remote area, you don't get it. But far more important is actually electricity. Because the thing is, if you can't recharge your mobile phone, it's not much use having a signal. If you've got to walk for 5 miles, you've got to plug it in, you've got to wait, you've got to pay for that as well. Do you want to use actually, download 3G, watch a movie where the battery will run out in half an hour? But I think the key thing is the cost of data. And I'm sure you know this yourself. Anywhere that you are in African cities, if you are downloading data, you want to watch a video or something, it's very expensive. And I think those are the key things. So the focus has got to be everywhere in West Africa. How can we get more places where people can get free or almost free Wi-Fi broadband? Because if you can do that, you just transform the way people use the internet.
Yeah, almost free wouldn't be bad. But the lack of digital skills has often been cited as an obstacle to, developing digital innovation in Africa. Is that really the case?
Well, the thing is, if you look on the ground, you'd think not. I mean, Lagos is known as one of the coding capitals of the world. There are so many coders there, IT engineers. You'd think that can't make sense. And if you look at Nigeria as well, for example, there are over 50 fintech hubs there. That's with at least 10 startups in each. And there are hundreds of other innovators out there. But I think the thing is, even though there's a pool of excellence, it may be that the pool is very small. There is a lack of talent. So in the sense a company comes in, it's not that there aren't great IT engineers, it's that they've all been poached by Amazon or Microsoft, who are offering much better salaries. So I think the whole thing is there needs to be a lot more. And I think we need to do more research on actually what is the level of digital skills, because the innovation is there in West Africa. It's just we don't have enough of those essential IT engineers out there at the moment.
All right, so it's 2022. What's the next big, thing in digitalization?
Well, I think the big thing to look out for this year is DeFi, decentralized finance. And what it essentially is, if you like, it's financing on the blockchain. We've heard so much about cryptos, and to tell the truth, things like Bitcoin have just become a speculative asset. People put money in to make money, not to do anything with the crypto. But the idea of blockchain is always about encapsulating trust and a very seamless, easy way to transfer it. So decentralized finance is lending based on that. And a lot of it is actually crowdfunding. And that's exactly something which is very common in Africa, whether it's the Harambee, the Susu, or whether it's actually some of these platforms out there. And if you imagine one of the greatest user cases, imagine making a micropayment over the border. You're in Nigeria, you pay someone 12 cents in Ghana. Doesn't cost you anything, done instantaneously. That's what could be done with DeFi. So I think you should look out for it. I think we're going to see a lot more about DeFi this year.
Quite incredible. Yeah, DeFi is quite big in that crypto space. All right, Ted George, thank you so much for coming on the program. Ted George, Chief Narrative Officer, Kleos Advisory.
Thanks. See you next time.
Thank you. All right, moving on now. The South African Reserve Bank's Monetary Policy Committee has increased the repo rate by another 25 basis points, taking it to 4%. This brings the prime rate to 7.5%. The central bank also hiked its forecast of headline inflation of the year from 4.3% to 4.9%, giving a warning that risks to the inflation outlook are to the upside. Reserve Bank Governor highlights the risk inflation has had that led to the Monetary Committee's decision to increase the country's repo rate. To take a listen.
In the near term, headline inflation has increased well above the midpoint of the inflation target band and returns close to the midpoint in the fourth quarter of 2022. Some risks to the inflation outlook, like food and fuel, have been realized. And other risks, such as currency volatility and capital flow reversals, have become more pronounced. Against this backdrop, the MPC decided to increase the repurchase rate by 25 basis points to 4% per year with effect from the 28th of January 2022. 4 members of the committee preferred an increase and 1 member preferred an unchanged stance. The implied policy rate, part of the quarterly projection model, indicates gradual normalization in the first quarter of 2022 and into 2023 and 2024, given the inflation forecast. As usual, the repo rate projection from the QPM remains a broad policy guide, changing from meeting to meeting in response to new data and risks.
Now to West Africa, where the government of Ghana, through a Trade and Industry Ministry, signed a memorandum of understanding with Rwanda to deepen bilateral trade relations between the two countries. Speaking at the signing ceremony of the MOU on Trade and Economic Cooperation at the Africa Trade House, the Minister of Trade and Industry expressed optimism that the agreement signed will develop into a strong and mutually beneficial relationship between the two countries. He noted the significant role Rwanda has played in some of Africa's business-oriented policies, including the establishment of the African Continental Free Trade Area. And the East African Community has unveiled a strategic plan to double its fruit and vegetable exports to $900 million in the next 8 years. In the 2021-2031 strategic plan, the region plans to increase the area under fruit production by 5% to 10 million hectares, with an eye on the global export market. If implemented, the intra-EAC trade in fruit and vegetable products would increase from the current $9.9 million to $25 million by 2031. The region also plans to increase vegetable production by 5% of area cultivated, 45 million hectares from 32.8 million hectares, with productivity increasing by at least 3%. And Ghana secured $7.33 billion in revenue since it started commercial oil production in 2012. According to the 2021 semi-annual report of petroleum funds, of the earnings, $6.02 billion was obtained from total lifting, whilst $1.32 billion came from copper tax, surface rental, among others. In terms of disbursement of the crude oil receipts, $1.26 billion have gone to the Ghana National Petroleum Corporation, whereas $2.89 billion went to the annual budget amount. And that's it on Business Incorporated. Thank you so much for watching. Enjoy the weekend. I'm Ladi Williams. Bye for now.